Hi, Assalamualaikum. So first of all, I will talk about summary of MFRS 16 leases. So MFRS 16 is consistent with international accounting standard, particularly with the International Financial Reporting Standard, which is IFRS 16, ensuring that Malaysian financial reporting aligns with global best practice. And also, MFRS 16 is an accounting standard that was introduced to address the criticism of IAS 17 regarding the omission of lease transaction on lessee financial statement. So, the implementation of MFRS 16 requires companies to recognize assets and liabilities for leases with term of more than 1 year. This study aims to improve transparency and accuracy in financial reporting by eliminating the off-balance sheet treatment of leases. It has practical implications for both leases and lessors and has prompted companies to reevaluate their lease strategies and financial reporting practices. The adoption of MRS 16 can be complex, involving data collection, system changes, and significant financial statement adjustment for leases. It requires careful construction and planning. The implementation of MRS 16 has implications for financial statement and financial ratios, and it is important for companies to understand and adapt to these changes.
Assalamualaikum and a warm greetings. I am Nur Fatima and my metric number is 289530. So today I'll be explaining regarding the theories that has been contributed toward the development of MFRS 16 leases. So the first theory is normative accounting theory. Normative accounting theory are basically a theory that focus and prescribe on how financial accounting and reporting should be conducted. Besides, the aim of the normative accounting theory is to establish a set of principles and standards that guide the development and implementation of accounting policies. So the first contribution that has been made by the normative accounting theory towards the development of MFRS 16 leases are prescribed ideal accounting treatment. Under this, normative accounting theory has prescribed the best accounting procedures and techniques to recognize, measure, and also disclose the lease transaction in context of MFRS 16 leases to reflect the current economic realities of leasing agreement. Next contribution are conceptual framework alignment. So, in developing MFRS 16, the standard setters refer to this conceptual framework to ensure that the principles and standards prescribed by the normative accounting are inconsistent with the fundamentals of accounting concepts such as relevance, reliability, comparability, and understandability. The third contribution are ensuring transparency and accountability. Normative accounting theory has significant emphasis on transparency and accountability of financial reporting. Thus, this clearly means that the development of MFRS 16 clearly focus on the transparency of leasing accounting, making sure that all relevant lease-related data are accurately recorded, recognized, and published in the financial statement. The next theory that has contributed to the development of MFRS 16 leases are positive accounting theory. So positive accounting theory, it focuses on empirical research to identify the patterns and relationship in accounting practice. This is through using observation and data to understand how various factors influence the choices that made by the entities in preparing the financial report. Besides, positive accounting theory also seeks to explain and also predict the accounting practice by examining the behavior of individuals and organizations that involve in the financial reporting. Now, moving to the contribution that has been made by the positive accounting theory. So, the first contribution are empirical research and observation. So, this clearly means that a positive accounting theory, it relies on empirical research and observation of real-world accounting practice. So, for the development of MFRS 16, it is actually has been informed by studies and also on data. The data that explain on how company currently account for leases, and this has provided the insights to prevalent practice and helping standard setters to understand the practical implication of different accounting methods. The next contribution are historical cost versus fair value consideration. So, positive accounting theory, it may involve in examining the historical cost accounting model and fair value accounting model. So, in context of MFRS 16, the standard setters might assess how these different valuation approach align with the economic relative lease transaction and whether which method is more widely accepted and preferred in the practice. Moving to the last theory are agency accounting theory. So agency accounting theory, it's basically analyze the relationship between the principals who are the shareholders and also the agent who could be the manager or executive in this organization. So in this agency accounting theory, basically we are going to recognize the conflict of interest that may arise in between these two groups of people due to the difference in goal and information. So the first contribution of agency accounting theory is alignment of interest. Agency accounting theory, it emphasizes the alignment of interest between the principals and also the agent. So in context of MFRS 16, the standard setters, they will consider how different accounting treatment for leases align with the interest of both lessee, who is the agents, and also lessor, who is the principal. So the goal of this is actually to ensure that the financial reporting accurately reflect the economic substance of lease transaction and minimize the agency problem. Next is incentive structure and lease accounting choices. So the idea of agency acknowledges that the agent could possess incentive that diverge from the objective of the principles. So standard setters will take into the account the potential for varied lease accounting option to encourage or discourage the manager while developing MFRS 16. So the intention is actually to create the accounting rules that will minimize the potential opportunistic behavior by the management and are in line with the long-term interests of the shareholder. So that's all from me. Thank you.
Hi and good day everyone. My name is Sarani Gobi. My matric number is 284538. The third part is about the main parties that involved in development of formulation of MFRS 16 leases. In January 2016, the International Accounting Standard Board, which is IASB, released IFRS 16 leases. In April 2016, MASB released MFRS 16 leases. The main responsibility of MASB is to provide standard for financial reporting and accounting. Firstly, the first main party is International Accounting Standard Board, which is IASB, and Malaysian Accounting Standard Board, which is MASB. The main parties involved in developing and formulating international financial reporting standard, including MFRS, is mostly the responsibility of the International Accounting Standard Board, a global standard setting body. Moreover, as the National Accounting Standard Setting Body in Malaysia, the MASB is directly involved in the development and formulation of MFRS. The MASB adopts international standards, taking into consideration to the local context and needs. Secondly, the stakeholders. The stakeholders, individuals who contribute to the development of MFRS 16, are known as internal and external stakeholders. As such, they must be aware of how this standard will impact them as participants in the financial success of the organization. An organization or business must communicate and educate its stakeholders on the transition alternatives accessible to them when implementing the MFRS 16. The third main party is academia. Academia professionals such as accounting professors and researchers may contribute their expertise and research finding to the development of accounting standard. They also can provide valuable insight into the theoretical and practical aspects of accounting. Academia plays a significant role in enhancing the accounting professions. This is also achieved through two methods, which is by using teaching or doing research part for the lecturer and student. The purpose of teaching is to prepare students for the needs of the business environment. It involves the preparation of accountants to encompass technical accounting knowledge. And also problem solving, professional practice skills, and a deep understanding of the accountant's public role. The lecturer also will make sure that students are well informed of the MFRS 16, which relates to the lease contract between the lessee and lessor, also how to recognize them based on the standard. By doing that, it is expected their students may be able to apply it to their works in the future. The second is the purpose of research is to challenge, criticize, and make contributions to knowledge. The results of the accounting research are published mainly in academic journals and occasionally in professional journals or textbooks. The researchers may find the advantages and the disadvantages of the MFRS 16 leases and compare from the previous recognition of leases in MFRS 17. By using research, it can make the researcher more confident in what they are doing and know how to apply that what they learn in their research work. They might propose solution and also suggest recommendation for the limitation of this standard. The last main party is professional accounting bodies, such as the Malaysian Institute of Accountant, which is MIA, and Malaysian Institute of Certified Public Accountant, which is MICPA, often play a role in development of accounting standards. They may also provide feedback, represent the interests of their members, and collaborate with standard setting bodies to ensure that the standards meet the needs of the accounting profession. For the Malaysian Institute of Accountant, which is MIA, it sets the bylaws on professional conduct and ethics and auditing standard for the accounting profession in Malaysia, and also to regulate the development the accountancy profession in Malaysia to support nation building. Secondly is the MICPA, which is involved in training and development of accountants in Malaysia, also enhance the theory and practice of accounting, and also to maintain a high standard of practice and professional conduct by its members. That's all.
Next is nature of MFRS 16 leases, whether MFRS 16 leases is rule-based accounting or principle-based accounting. So first of all, rule-based accounting basically offers precise instruction, boosting accuracy and reducing manipulation. However, it can be overly complex, leading to transactions succeeding rather than reflecting economic reality. But now, I will explain also the principle-based accounting. Principle-based accounting uses broad guiding principles instead of strict rules. This allows for greater adaptation and flexibility, but also increased subjectivity and variability in financial reporting. Some argue that principle-based standards are more effective in promoting high-quality financial reporting than a complex rule-based system. So the answer for whether MFRS 16 leases is rule-based or principle-based is MFRS 16 leases can be considered a principle-based accounting standard. This is because it introduces a single accounting model for all leases with terms of more than 1 year, requiring the recognition of assets and liabilities for leases. The standard also provides guidelines list or an operating list based on the transfer of risk and benefit. From the official IFRS Foundation page on IFRS 16, the standard focuses on reporting information that faithfully represent lease transaction and provide a basis for users of financial statement to assess the amount, timing, and uncertainty of cash flows arising from leases. This objective align with the principle of relevance and reliability, suggesting a principle-based approach to lease accounting. By adopting a principle-based approach, MFRS 16 leases aim to improve transparency and relevance in lease accounting, and also allows for a more accurate representation representation of a company's assets and liabilities related to leasing activities, providing users of financial statement with a clearer understanding of the financial position and performance of the company. Overall, the MFRS 16 leases is a principle-based nature, allows for flexibility and adaptability in accounting for leases, considering the specific circumstances of each lease arrangement. It also promotes transparency and relevance in financial reporting, enabling users to make informed decisions based on a more accurate representation of a company's leasing activities.
My name is Nur Shamimi Zulaika binti Muhammad Rizwan, metric number 288046. Limitation of MFRS 16 leases. The recognition and reporting of lease transactions have been completely transformed by MFRS 16 leases. Although it has improved financial reporting's comparability and transparency since its introduction, it is not without limitation. There are 3 limitations that we found out from the standard, which are the complexity, potential for volatility, and data collection hurdles. So, the first limitation is complexity of MFRS 16 leases. Baron 2014 states that the complexity of IFRS 16 and the associated implementation costs are concerning to accountants. The complex accounting model brought about by MFRS 16 require comprehensive disclosure of lease in commitments and in-depth lease analysis. This increased complexity present a big obstacle, especially for companies that have a lot of leases or complicated lease agreement. To comply with the new regulation, businesses must understand intricate accounting ideas like embedded option, assessment, lease liability measurement, and lease term determination. Implementation can be difficult and time-consuming task for companies with little resource or experience in accounting. For example, businesses such as real estate firms that have leases with embedded option or variable lease payment may find it difficult to implement the standard in an efficient manner due to the lack of specific guidance for complex lease agreement. The ambiguity of the standard may lead to accounting process inconsistencies and deceptive financial performance. Okay, next, potential for volatility. The new standard requires lease liabilities to be recognized on the balance sheet, which may cause financial performance metrics to become more volatile, especially for businesses that engage in a lot of leasing. The early recognition of lease expenses is the cause of the increased volatility, which can have a big effect on the company's profitability ratios. Furthermore, a company's debt level may rise as a result of the upfront recognition of lease liabilities, which could have an impact on other financial metrics like the debt-to-equity ratio. For instance, because of the upfront recognition of lease liabilities under MFRS 16, a company with a large number of leases like an airline, which is AirAsia, with a fleet of leased aircraft may see increased volatility in its financial statements. Lease expenses can have a big impact on debt level and profitability ratios, which make financial performance look more erratic when they are recognized immediately. Some of the leases' financial ratio will be impacted by changes to their accounting. And the last one is data collection hurdles. To gather the information required to meet MFRS 16 requirement can be a difficult undertaking. It may be challenging for businesses to get complete lease data, especially for older or poorly documented leases. The implementation process may take longer than expected and incurred higher costs as a result of the lack of easily accessible data. Complicating data collection efforts can be the lack of reliable data management systems and the unavailability of historical lease records. According to Altamura 2014, they must make assumptions about the fundamental economic features of various leases because they lack access to comprehensive operating lease agreement. To exemplify, it could be difficult for a business that has a history of incompletely recorded leasing transactions to obtain accurate and comprehensive lease data in order to comply with MFRS 16. Lack of easily accessible data can cause financial reporting to be inaccurate, implementation time to be longer, and expenses to rise. That's all from me. Thank you.
Good day everyone. My name is Tarini, daughter of Kalivanan, matrix number 284443. Today I am going to present about suggestion or recommendation to overcome the limitation. The first suggestion is combine normative and positive approaches in standard setting. Normative approach is a traditional method of setting accounting standard based on theoretical framework and concepts, while positive approach involves observing and analyzing of actual behavior. By combining normative and positive approaches, standard setting bodies can benefit from theoretical grounding while also considering real-world implications. They can also understand how companies respond to standards, can provide insights into potential gaps or areas for improvement. This integrated approach can result in more robust and practical accounting standards. Secondly, narrowing choices of accounting method from an agency theory perspective. Agency theory addresses the relationship between principal and agent. To address agency problems, the suggestion implies the need for standard setters to limit the choices available to companies and accounting for certain transactions such as leases. This can be achieved by providing more specific guidelines or recommending a preferred methods. By doing so, the potential for conflict interest between managers and shareholders can be reduced, enhancing transparency and aligning accounting practices with the objective of financial reporting. The last suggestion is improving the quality of transparency, reliability, and relevance of this financial report for users. Transparency refers to the clarity and accessibility of information. In the context of lease accounting changes, ensuring that the impact on financial statement is clearly communicated and understandable is crucial. Reliable financial information is free from error and faithfully represent the economic substance of transactions. Enhancing reliability in lease accounting could involve refining measurement methods or ensuring the estimates are based on the best available information. Relevance implies that the information provided is pertinent and influences the decision of users. In the case of lease of accounting, it could involve tailoring standards to ensure that the information disclosed for meaningful users in assessing the company's financial position and performance. By focusing on these qualities, which are transparency, reliability, and relevance, standard setters can contribute to the production of financial reports that better serve the need of users. This involves an ongoing process of refinement and adaptation to ensure that the accounting standard keep pace with evolving business practices and user requirements. That's all from me. Thank you.